Hello and welcome to your June 2023 edition of the Rate Watch, where I do a deep dive analysis into this morning's Bank of Canada interest rate announcement. There's lots to cover. Let's jump right in. Well, here we have it. The Bank of Canada surprised markets by increasing the overnight lending rate by another 25 basis points. So the fact that they've increased today at this session, at this meeting, is surprising. But the market already widely anticipated and priced in a 0.25% increase in Q3 and Q4 of 2023. So the bank looks to have wanted to get ahead of the curve and start dealing with the increases right away. There are a couple of things that really pointed to an increase to the Bank of Canada's prime rate. The primary one was, well, there are three things really. We have an increase, stronger than expected GDP growth in Q1. The GDP came in way hotter than expected. The bank only expected 2.5%. It came in at 3.1%, which in relative terms is way, way hotter than anticipated. Inflation in April, unfortunately, we were expecting it to come down. It accelerated again. And job numbers continue to impress, meaning that the economy is working at full capacity. So there is still work to be done to get inflation down. The bank felt it was prudent to do the increase sooner than later rather than let it ride. And so that's what we are seeing today in today's announcement. So the question now becomes, where do we go from here with interest rates? Unfortunately, I don't think you're going to like the answer to that question. It is higher interest rates for longer into the future. This is just a tool that I want to show you really quickly. It uses a specific type of Canadian financial instrument that helps to predict the implied movement of the Bank of Canada in the future. So this is when we say the market traders, this is what traders or the market is anticipating. Across the top, you have the different quarters of the year. Q2 is June 2023. That's where we are right now. Q3, Q4 is December, and on you go into Q1 of 2024. And what this chart is showing us is the implied probabilities of a Bank of Canada move. And at the moment, for Q3 of 2023 and Q4 of 2023, the markets are essentially pricing in a 100% chance of a 0.25% increase to the Bank of Canada rate. And in fact, they're starting to put in the remote possibility, 7% chance and 15% chance in Q4 of a 50 basis point increase. But this gives you an idea of where we anticipate interest rates to be into the future. And you can see that the market is not pricing drops until basically a year from now, Q2 of 2024. My name is Christopher Mulder. I am a Toronto-based mortgage broker. If you found any value in today's video, please consider giving us a like, subscribe to my YouTube channel. And if you have any questions or concerns about how to position yourself in today's market with these higher interest rates, please don't hesitate to reach out. I'm just a phone call or an email away. Until next time, bye for now.